Hello, and welcome to another edition of Real Day Trading and a continuation of the 5K Challenge, Part 2. So, let's get started. Here's our account. You'll see it says 4654. It's really 5,000. I'll tell you what. 2 seconds before the bell rings, this is at $5,015. Right after the market closes, the option prices go a little bit screwy, and sometimes you get these swings, but by the next day, they kind of rectified themselves. So it's at 5. So what did we do today? How did we kick off part 2? What did we start doing differently? So on. Well, in order to look at that, the first thing we got to do is look at the market. And let's take a look. Here we are. Here's the market. We've had a huge 3-day rally, one of the strongest 3-day rallies in SPY in the last few years. Great. Okay, so kind of hard to start getting used to that again, right? You're just waiting for the other shoe to drop. Well, normally I tell you that's an issue you need to deal with, but in this case, it's kind of warranted. Because consider this: you run an investment firm, right? You got hundreds of millions of dollars. Now, you want to deploy some of that because, okay, we've had a pretty good dip here. Powell comes out with his, his saucy ways and that devilish smile of his and gives us a 0.25 bump. Okay, and you're feeling pretty good now. You're feeling a little bit more bullish. So you want to deploy some of that capital. And sellers take a little bit of a breather, a little bit of a seller's boycott here. Well, all right, let's just see how things go. But let me ask you this. You know full well that if anything gets worse in the Ukraine, and it's hard to imagine it can get worse than it is, but if Putin comes out with a nuclear threat or one of those missiles lands an inch onto NATO soil or uses chemical weapons, any of those things, other than the horrific loss of human life that would occur, you know, and I know this market would freak the fuck out. Why? How do we know that? Because I see this all day, every day, and anytime there's even a hint of things going worse than they are, the market just like drops. So are you comfortable as an investor leading those firms, deploying all your capital again? Yay, we can all get back in. Is that your mentality right now? Because I wouldn't, and I don't know many who would. So I think we're going to probably at the very least need to have a retest of support somewhere in here. Maybe it's tomorrow. Maybe, futures are down right now. Maybe the market takes a little bit of a breather tomorrow and goes down to probably around, let's say, 428. Possible. It's going to happen at some point. I'm pretty sure that we're going to retest support here. Now, unless all of a sudden we get, a peace treaty signed, in which case, yay, everybody's happy, the world's happy, and the market's happy. Okay, great. But unless that happens, I don't foresee a continuous green upward. Very least, we need to retest support. We'll see what happens. But on to today. So our first trade, and what we're going to do is we're going to fill out TraderSync together. Right? I started on the first one. Crowd. So we get that out there. Crowd. Click on this. Trade. Here. Yes, go to crowd, damn it. Go. No. You little rat bastard. Hold on a second. This is my fault here. There we go. Okay, there's crowd. Okay. So today we took crowd a 200 to 205 call debit spread at 10:41 a.m. and we then sold it at military time here at 1:53 p.m. and we took a profit of $540 on the trade. Why did we choose crowd as our first inaugural trade? Well, one, here you have a stock that has a huge ATR. This thing for a $200 stock loves to move. It constantly going up or down 5%. You have a stock that is relatively strong. Look at this. You see that green there? That is huge relative strength to SPY right in the beginning of the day. But not only is it strong to SPY, it's also strong to its sector, right? So technology, and then it's software infrastructure, and look at that, crowd's right up towards the top. So you have a stock with a huge ATR, it's relatively strong, and it's relatively strong to its sector. Now, the only caveat to crowd here is that it comes up against its moving average, which, as you see here, it came up against it and popped back down. A little bit of a bad print here. It did not go up to 217, but it tried to get up there to 207, right around here, and it could not get there. By the way, we did sell pretty close to the top. We sold right here, right around 205. So we maximize the value of crowd unless it goes up further tomorrow. One, I did not want to see that retracement from the SMA. Two, I felt that we were probably going to take a little bit of a breather in the market tomorrow. And three, we were up 10% of the total account value on one trade. So I'm going to use a day trade when that happens. It's a pretty good rule of thumb. And why did we also take the trade here? I have in TraderSync. You'll see I took the trade because a good relative volume, a good relative strength, and it broke through resistance. Where was the resistance? Right here. You had horizontal resistance right here, and I can also draw a downward sloping line here as well. So it breaks through resistance with good relative strength and decent volume, with a nice ATR. That is a good enough reason for me to take this as our first trade, and that's what we did, and we cashed in on it. Okay, let's go take a look at our next trade. And our next trade was Oxy. I love Oxy. Once again, different context, different meaning. I love the stock Oxy, though it's not mutually exclusive. Let's take a look at Oxy. Oxy is one of the more popular stocks in the oil sector. Why is that? Well, if we go to sector strength here, right, and I go to energy, and I click on volume, Oxy is the #1 traded energy stock. Look at that volume. Everybody loves it. It's a strong stock that easily catches a bid. And we can take a look at its daily chart, and you'll see a nice, almost textbook bull flag forming here. That's first. Secondly, you got to go all the way back here to 2019 before Oxy starts hitting these highs, right? So right now, Oxy has broken through just about all forms of resistance, and even on days when the sector was soft, Oxy was strong. Let's take a look. The sector itself is okay. We are in Oxy here. Oxy sector is oil and gas, EP, there. Okay. And that is IX 2020. So I will go here. I'm going to go here. Comparisons. I'm going to go IX 2020. There. Click on that. All right. It's hard to see that blue line, isn't it? Let's make that yellow. Okay. I don't know if you can see that yellow line here, but even when the sector was down quite a bit. And put Oxy up here, by the way. There we go. Now we got it. Look at this. Here's the sector. See it dropping there? Look at Oxy. Not. A little bit of a drop here, but still. One of the stronger stocks. And we know that if things go worse in the Ukraine, this stock is going to be one of the first to pop. So I bought 2 calls at 1043, and then I added to it at 120, pretty much at the same price. So why did I do that? Well, it obviously has relative strength. It actually has a good relative volume. It's got a good, strong or good daily chart, and it has sector strength as well, plus relative strength to the sector. A lot of reasons. So we're going to hold on to that. We have 3 calls. We're going to hold on to those calls. And I'm targeting for that stock right now a price of a break, first off, of the high here of around 60. And then I am looking for, spin out here a little bit, right around there. Go right, where is it? There. 69 is a huge resistance point here. Fell off the cliff last time. It did not recover since then. That was way back in April of 2019. So I'm going to see how it's starting. If it breaks 60 and looks like there's not much retracement, we're just going to let it go. We're going to let it continue going. We might add to the position. If, however, it looks like there's a huge sector rotation or things start improving in the Ukraine and gas prices start coming down, then obviously we will reconsider this position. But I think it's a good position because not only does it act as a decent hedge if SPY drops, but as we saw today, it can also be strong if SPY is going up. This is one of the more perfect hedges to have right now because no matter which direction you go, you're pretty much covered unless you get rotated out of the sector. So, go to the next trade here. Okay. I did a quick trade in futures. Let's take a look at it. So I did a futures trade here at 43.47 and got out at 43.52, and I did that at 11:11 a.m. So let's take a look at Option Stalker and go to the 5-minute chart on SPY and go to 11:11, which would be right here. There it is, right there. And you can see coming down, look at that bullish cross from deep trough. Here, look at that, right there. And I took the 5 points. Obviously, I could have stayed in it. I admit I was a little bit trepidatious there, given that this was one of the second or third trade in the 5K account, but could have stayed there, but took $50 on 2 contracts. We need, I believe, in Thinkorswim, $1,660 of margin to do 1 micro mini, right? So 2 would be around $3,200, $3,300. Okay. Let's label that in TraderSync here. Let's go down here, and it was a 1 OP bullish cross. There we go. Okay. Then we came to our first hedge, and the first little pain in the ass of our challenge, Microsoft. We now have 7 contracts of it, and we're going to click on Microsoft. We started out at 1134 with a 290, 285 put debit spread. Well, let's check it out. Microsoft. Zoom in here. First off, Microsoft, I want to take out all of the drawings, delete the drawings here, delete all drawings, gone. And we're also going to take out the comparison here. Good. Okay, so here's Microsoft. First, we have this. That is pretty strong resistance on Microsoft. It comes in right around 297. Right above that, you have the 50-day moving average and 200-day moving averages. So you have some pretty strong resistance here. Going to be really hard for Microsoft to get above 300, basically. It's going to need a reason. So that's number one. Number two, you have another point of resistance. Look at this. Pops through right here, comes through right here. This seems at 295 to be a very popular selling point, and today was no exception because it did not get above 295. Now today you had a really strong market, right? We look at Microsoft here. Market's pretty darn strong. Gosh darn it. Microsoft isn't. Microsoft never really, I mean, when you compare Microsoft to some of the other stocks in its sector, let's see, software infrastructure. Let's go check it out. Go to technology and software infrastructure. I mean, if you look at net, if you look at crowd, like we were talking about, and PLTR, I mean, let's just take a look at net for a second. Here's net, up $10, up 11% today. Same sector as Microsoft. It breaks through its moving average. In fact, this would have been a decent long for anyone. Breaks right through. Microsoft, on the other hand, I mean, look at this green bar for net. This is a daily bar today. Same sector. Now look at Microsoft. This is a doji. I mean, honestly, what the hell? So the stock's pretty weak. And I needed and wanted a hedge at that time to crowd. We didn't sell crowd yet. Interestingly, I had an opportunity to get a hedge in the same sector. So I have a stock that has relative weakness to SPY, a weak daily chart, it's weak within its sector, and has a lot of resistance ahead. Any dip in the market is going to take this down with it. So it would have been great to buy back these calls. Really, really would have. Because right now, they're worth around 15 cents, the 285 puts. I mean, they're offering almost no protection at all. If I could have bought those back and just let the 290 puts run, which, by the way, the 290 puts at 50 cents are incredibly cheap. 50 cents for a 290 put on a really weak stock like Microsoft that can drop $10 if the market's soft. That is, I mean, that's a pretty good position for a hedge there. I would have loved to have bought those back. Could not do it. So we have the 290, 285 still on. It can't hurt us so much anymore. I mean, it's not really. There's like what? Let's see, 32 cents here difference. So I can get dinged $32 per 7 of them. So there's around $220 left it could still ding us with. But there's a lot more upside. We have it on. It's good. I will go over here and let's enter it in. Trader Sync, Microsoft. We have a stock. It's relatively weak. Has a weak daily chart. It is weak to its sector. The only mistake was it is a debit spread with 1 day under PDT rules. Meaning, if it doesn't shape up tomorrow, we're kind of screwed with it, right? Okay. I then did another debit spread. So a second debit spread, Adobe. This point, we're tilted a little bit too bearish. We're going to address that. And you might be thinking, maybe got a little too many positions here. Probably right. Tomorrow, I'm going to trim that down as well. But Adobe, we entered this at a 435, 430 put debit spread at 1150. Go up here, go to Adobe, and you can see Adobe could not get through its algo line here. Once again, another doji. Once again, software infrastructure, third software infrastructure stock, really weak. Once that shows, I was about to say once again, that shows that how strong crowd was given how weak this sector is. Could not get through here. That is around 447. Volume is decent. Really weak daily chart. And when we got the spread at 1150, let's see here, 1150, where are we? Today, 1150, right here. Where stock is pretty weak. It's around 437. It's dropping pretty fast. SPY began to go up at that time, and the stock started gaining some relative strength, but still not getting past its algo line. So this one, I really, really had to restrain myself from buying back those short puts. And the reason for that is, you look here, and again, I don't know how much you can exactly trust these option prices, but this seems roughly right. I mean, look at that bid-ask spread, 35 cents to $1.11. It's not correct. But we're up $633 on the short side. I could have bought these back for around 450 cents each. We have 5 of them. Instead, tomorrow, if Adobe opens down $10, $15, it's great for us, but we could have had the full brunt of that on these puts. That I really struggled with because I could have taken the 633 in profit here and then just let these puts run. It would have risked 500 roughly and $575, somewhere around there. Actually, sorry, $675. As opposed to the 300 that it's currently risking. So it was about a $300 risk to do that. We are still getting some protection from this 430 short puts. But it really would have had a lot of upside for a stock that is bumping up against resistance. And again, with the probability that the market takes a breather tomorrow. Really, it was like last second. I pretty much had the order in to buy them back and then decided against it just to keep the spread on. So let's enter this one into Trader Sync. Okay. So we have a relatively weak stock that is relatively weak to sector. Oh, let's see here, sector weakness. Doesn't have great, the volume was average today, but it has a weak daily chart. Could have bought short side back and debit spread with only 1 day. So those were kind of the risks. It says mistakes, it should be risks. It's not a mistake yet. I then entered again into a short on SPY. That turned out to be a loss. I did it at 11:55 a.m. Go here, 11:55. Where is it? Right there. And you see here there's a corresponding bearish cross here, but it turned out to be a bit of a divergence as we went up. So took the hit there, minus $62, made the 50 on the other one. All told today, we're down $12.50 on the futures play. So I'm going to put here we had a bearish 1OP cross, and I suppose if I got out a little bit sooner, but where did it come here? Bearish 1OP. There it is. Trades. Next one, Ka. Really like Ka. Ka worked well. Ka is working. Now I said that probably won't work at all tomorrow. At 11:59 a.m., I entered into the 56 strikes of Ka, got 4 of them for 91 cents. A bit of a lotto. Take a look at Ka. Here's Ka. Finally out of the damn software sector into health sector, medical distribution. And look at this. Look at that. That is a huge, huge breakthrough on filling the gap here. You have a gap fill. It breaks through resistance. I mean, this stock was on fire today, and it did not stop. It just kept going. I think this is going to continue tomorrow. I mean, you might try for a little bull flag breakout here, but I think it's going to continue on tomorrow, and this will turn into a really profitable trade. So I'm just going to quickly enter that in here, as this stock was relatively strong, relative strength. This stock was a good relative volume, a good strong with a good daily, and it broke through resistance. It also broke through algo resistance as well. Twitter. Today at Twitter, we got 4 contracts. March 25th, we entered in at 118, 36 strikes. This one I didn't have to take. I might have been better off holding off on it. I did want a another bullish position. I still felt we were too bearish with our Adobe and our Microsoft, particularly since we bought back crowd at this point. So Twitter, you go see here, nice breakthrough of its SMA. It also broke through algo support yesterday. So this is a nice continuation of the previous break. I think Twitter continues tomorrow unless we see a huge market dip. Either way, we have another week with it. I am looking to see if Twitter is next going to break this high over here at 39 and then continue up. We have a lot of room to run on Twitter. Another reason I like it is we have it for a week and a half on these options, and we're in the money and a lot of room to still go on it. So we're going to hold Twitter most likely, see how it goes, unless we have a nice huge jump tomorrow, in which case we're going to take profit. So we're going to go back down here. Twitter, this one here had great relative volume. This one, the volume was great. Relative strength was great. It broke through resistance and regular resistance and algo resistance as well. Let's see here. SMA. There, it broke through its SMA. So there we go. Great. Twitter. Netflix. Okay, at this point I would maybe pushing it a little bit too big. I probably would have been fine with either Twitter or Netflix. I did not have to take both. I get it. I'll reduce the number of trades tomorrow. Goal here is maybe I'll get to 1 or 2 trades a day in this account. But for the moment, take a look at Netflix. We did a call debit spread of 370, 375. I entered into that at 135. Go over to Netflix here. Okay. Netflix broke through horizontal support here. Resistance here. It also broke through its downward sloping trend line. Bring it over here. There we go. Right there. Broke above it. So you have 2 breaks of resistance, a strong stock that continued 1, 2, 3, strong with the market as well. Doesn't really have the volume I would like, but there's not much standing in its way here, and this stock can move a lot. So tomorrow it'll be very clear. You know, Netflix is one of those stocks where you pretty much know right off the bat it's going to be a good Netflix day or a bad Netflix day. It rarely reverses or turns around. You notice there's not many. A lot of these are flat bottom, not many wicks here. I mean, this is not much of a reversal stock. If it starts out going down, it's just going to keep going down. And if it starts out going up, it just keeps going up. But tomorrow, obviously, if we finish at above 375, this is a stock that we could just let this spread run, right? If tomorrow Netflix is up to at 380, 380, we just let it run and almost expire, where we get the full credit for it. So I'm going to go back here, TraderSync, and put here. It didn't really have much. I'm not going to put relative strength here because it wasn't weak, but it wasn't particularly relatively strong. But it did break resistance. So we had a resistance here. We have some momentum with it, and it's a momentum with a catalyst because of what they said they're charging on the passwords. So, and we also have an HA continuation on the daily. So there we go. Oh, and then finally root. You know, I always love to take these sort of spec ones that don't cost much money. So 15 contracts at 7 cents each. It was $105. Root, some of you might have remembered Root from back in the day when, back in the day when Root was fun up here. Root has since fallen apart, but it's pushing up against this moving average. Doesn't mean that much on a stock that's worth under $2, but you can see this volume here is really strong. So on this stock, basically either it's going to go over 2 or it's not. If it doesn't, then I'll sell it for 3 cents and we'll take the loss. If it goes over 2, it's not going to take much for it to go in the money for us because it just got to go to 207 and we're golden. All right, and so that's root. Going to go back down here and finish entering root. This is a relatively, this is a spec play, and it's also a lotto. There we go. We've now entered these in, and perfect. All right. So now, tomorrow, like I said, I think we will see a little bit of a breather, and hopefully our hedges will come into play. But I'll be looking to close some of our positions. I really do want to stay with Oxy. I want to stay with our Twitter position. And the only one I'm probably looking to cash in pretty early is Ka, because that one expires tomorrow, and we want to make sure we get the full value before any type of time decay, and it has any type of pullback right before close, and that could screw the whole position. All right, well, that is our recap of the 5K challenge day 1. We're pretty much even right now, and tomorrow we will head into the weekend, and we are going to hopefully be over 5K, headed up towards 15, and a successful completion finally of this challenge. All right, everyone, have a great night. And before you do, I have to remind you, because I'm getting so many questions still, to read the damn wiki. I'm still seeing posts and questions, and I know it's a lot of new people, and they come in and they don't know. So they don't know to read the damn wiki. And you tell them, and then, oh, I read the wiki, and then you're like, you freaking liar. No, you didn't. You didn't read a damn thing, did you? No, because why else would you be asking such a stupid ass question? But it's fine. It's fine, because I love them all. Everyone. You know what? With patience and a calm, serene teaching method, we can bring everybody over with love. That's how we do it here at Real Day Trading. With love. Now, go read the damn wiki and have a good night.